Bonds are starting to rally, but the market hasn't reacted. Bitcoin seems to be teasing that it's found a low, but still can't find its legs. Russia accidentally bombed Poland. Does this mean World War III is going to happen? And it looks like the election rally came in, but already seems pretty weak. Should we start preparing for the recession ahead? Let's all talk about it. Bonds have been awful all year long, and usually this is a place for investors to hide when the stock market isn't doing well. However, we have a historically awful bond market, one that hasn't been seen in decades, one that actually burned me multiple times this year. Of course, with good risk management, we've been able to manage in and out of this, and recently took a position and some options, a pretty sizable position once again, to try and finally time this correctly. And this time it seems to have worked. So I'm pretty happy with where the position's at right now. One of the things I want to point out is all the strength that we're seeing on the RSI right here, starting to fire to the upside on the TTM squeeze as well. This is signaling to us that the bond market is looking ahead at the depreciating earnings, at the fact that inflation's starting to come down, saying, okay, we're getting closer and closer to a Fed pivot, maybe some easing on this interest rates. Probably time to start piling back into bonds. If we take a moment real quick, here's the timestamp for when I entered that TLT position in the late October. And also here's some data that we shared for the contenders in the Discord, showing that private clients are starting to buy bonds actually for the past 3 months. So even into the volatility that we've seen before this recent rally, private clients and funds are already looking at bonds as an appealing pivot to equities in the current market conditions. And speaking of pivots, we should probably pivot to crypto, where we have this big story that just hit. Economist Nouriel Roubini has come out before CNBC and said that he thinks the CEO of Binance is going to be the next ticking time bomb. And we're seeing that fear is continuing to run rampant in Bitcoin. And I think you're going to actually want to watch this clip of him because he had some pretty harsh words to say.
What are the 7 C's of crypto? Concealed, corrupt, crooks, criminals, conmen, carnival barkers, and finally CZ, who's just on the stage right now. I was supposed to debate him a year ago here in the UAE. At the last moment, he decided to escape. He didn't want to be on the same stage as me. Guess what? 2 years before, I debated Arthur Hayes, CEO of BitMEX, and a week later he was indicted and ended up in jail because I wrote he was a crook. At your seat, who was supposed to be here just today? Kevin Leary was a paid hack for FTX. Good reasons. I hope that CNBC is going to get rid of him. Unfortunately, this is an ecosystem that is totally corrupt. Unfortunately, it is, and I think the lesson of the last few weeks is these people should be out of here. I can't believe that CZ and Binance has a license to operate in the UAE. It's banned in the UK. Is under investigation by the US Justice Department for money laundering, $8 billion of money from Iran. And he's here on this stage, and he has residence in this country. The regulator should be thinking carefully. That's a walking time bomb.
He didn't just drop that mic, he spiked it into the floor like it was a 50-yard touchdown. But let's think about what's going on in the crypto world right now. We're seeing extreme, persistent fear. We're seeing projects start to capitulate, shams start to be exposed. People are panicking. Everyone's now wishing that they held all their crypto personally, which I actually think is what you should have been doing the whole time. But Bitcoin is a technology that I believe in strongly. And last week we talked about how more lows could be on the way. But right now, I think this is the biggest buying opportunity. I said that, and I think I still caused too much hesitation and didn't properly represent what I've been doing. I'm already incrementally buying in Bitcoin, and I will continue to do so as this fear continues to persist and into more lows. These are some of the basic building blocks of investing, right? And even though the cliches are easy to say, like, oh, get greedy when people are fearful and be fearful when people are greedy, in practice, they can be a lot harder. But that said, it's time to turn the emotions off, turn the robot on, and hit the button. For me, that is. Remember, educational content, not financial advice. And next on the chopping block, we got to talk about the news that caused the market to crater yesterday, and that was this attack against Poland. Remember, I did a video on how I traded this news, by the way. It's on the channel if you want to watch that. Now, there were rampant reports that 2 people died because of a Russian missile in Poland. However, we have some follow-up statements from President Biden that actually suggest that it was a Ukrainian missile that hit the people in Poland, which they're saying was a misfire while they were defending against a Russian attack. Here's the clip of Biden now.
Say whether this missile was fired from Russia?
There is preliminary information that contests that. I don't want to say that till we completely investigate, but it is. It's unlikely in the minds of the trajectory that it was fired from Russia, but we'll see. We'll see.
Unlikely, sir?
Mr. President, is Poland suggested invoking Article 4 or 5 from NATO, sir?
The suggestion is we're going to probably have a meeting of the ambassadors. So that looks like we're going to go to next. Thank you.
If you're confused about that Article 4 and 5 question, that is the NATO agreement that any country that's attacked within NATO is considered an attack against all countries within NATO, which is obviously a big deal because that would be the gateway into World War III. Now, I don't think that this is actually a likely scenario. Not only is there evidence that it wasn't a Russian attack, and although death is always sad regardless of when it occurs, I think most countries want to step away from this conflict and start to really ease down these tensions. We've even seen some countries push Ukraine to come to some sort of agreement with Russia so that we can get a quick end to this, because it's not going very well for anyone that's involved, especially when a global recession is likely just a few quarters away. Most countries are going to turn their attention from what's going on elsewhere to what's going on at home because they'll have enough problems on their own plate. And speaking of problems on the plate, we're now looking at an election rally that looks really weak. And last week I said I was going to sell into the strength, and I have started some incremental selling as well because I wanted to buy some bonds and I wanted to allocate into some energy. But when we look at the SPY, where even is the strength? Can you call this strength? We can see that we're getting close to that 200-day moving average, which is the line you see here. On the Fibonacci's, I have a ABC corrective wave. Makes it look like we could maybe push to 416 in the short term. And I do think that given these strong RSIs, both on the daily and on the weekly, now over a 50 RSI, this is an indication of a bullish market, and we could see an extension of a bull run. However, this does not change the looming recession or the earnings compression that we'll likely see in the future, which had some even better representation in the data that we shared in the Discord. If you see the divergence between earnings and sales expectations signals shrinking margins ahead, shrinking margins, terrible for earnings reports. And I think the next earnings season could be a rough one, the next few, in fact. And if we also look, where's the other chart that I wanted to show? If we look at this chart here, what we're seeing is a major divergence between realized and implied volatility. Now, this is very unusual. As you can see throughout the year, we haven't actually had this happen yet. But the black line is going to be your realized volatility. That's going to be the VIX, often called the fear index. And your implied volatility is going to be the kind of volatility built into your options contracts. Both are supposed to represent the potential move that the market could have in either direction. But right now we're seeing that the underlying market mechanics say that there's a much larger move that could occur than what the fear index is telling us. This is definitely interesting, and right now I want to say that this will likely make a quick downturn on an election rally, but that there's more fear in the market than is currently being shown. I also wanted to cover XLE, which is a broad ETF of all the energy companies. Great thing to watch if you're wondering about what energy's headed. One of the things that's standing out to me is we're still bullish on a longer time frame, but we're seeing a lot of weakness here. A lot of weakness that's also represented in both USO and UNG, which is your oil and natural gas. And we might want to be cautious here of the fourth wave actually having another downturn and this trading sideways. Now, remember, when we're doing Elliott waves, remember there's a huge educational thing in the Discord about Elliott waves, but a wave 2 right here was a pretty straightforward wave 2. Usually that means your wave 4 could be twice as long as the wave 2 and then be more choppy than wave 2. That would be the traditional development of an Elliott wave. And one of the things that I'm also seeing is if we look on the shorter time frames, like this 30-minute chart, We can see that the RSI is looking really bearish. And so we might want to start thinking about, okay, we could actually see another drawdown before we actually finish this fifth wave up. Now, last week I said this was the bottom, but right now I just wanted to give a small update that we could have this expectation where we probably want to look for this dip and then get in a heavier allocation there. There's a lot of very key moments here in this market. Still a bunch of money to be made, but you better move cautiously. And now if we head over to the economic calendar for the upcoming week, we could see that tomorrow we're going to get some initial jobless claims. That'll be important to keep an eye on. There's going to be some more Fed speeches. These have been actually really interesting as of late, although haven't had the greatest market effects. Mainly what you're going to be watching for is next Wednesday we have our FOMC minutes. And we'll get some updates on what the Fed is looking at. And I expect them to be extremely hawkish, especially from how Jerome Powell was acting the last conference that we had. Now, that's going to be it for this week's report. I do still have a video coming out about passive investing versus active investing. I got sick. I also got in a car accident, so that got delayed. But it will be coming out, hopefully, before the end of this week. Although, maybe I should just stop making promises in general, and, you'll get it when you get it. But for real, though, that will be coming out soon. Oh, yeah, I'm also going to, at least once a week, live stream from market open to close, because I've been told that that's something I should do, even though generally I don't know how to be entertaining for a full 8 hours. But we're going to figure it out. So, get excited. Maybe. I don't know.